Hello, hello, hello. Let me know if you can hear me. Let's see. Is this the right channel to learn about Canto? Not particularly. I don't really understand the hype for Canto. I mean, Canto and Doge Chain, like everything is so liquid, so I don't really see a point in playing there. But who knows? Maybe I'm just complacent. So I don't have too much to talk about today. This stream is gonna be under an hour because I have some things after the stream. So I think the presentation is gonna be like 10-15 minutes, and then I'll answer some questions. But before I do the presentation thing, I'll just answer the chat, see if anyone has some pressing questions, and then we can talk about, my bias, my bullish bias, and just the idea of this dip buying mentality. But before answering any questions, not financial advice, right? I'm literally some dude on the internet that likes to buy internet coins. So like, what the hell do I know about anything? It triggers me that you don't put your slides in slideshow mode. Okay, okay, go. Feel free to unsubscribe. What is the current price for corn futures? I have no idea. Okay. I'll give the chat a few minutes if they have any questions, but if not, I'll just get into the presentation. Let's see. How's my coffee business doing? I don't know, actually. I left last year to focus more on crypto. They're actually doing pretty well. Let me show, maybe I shouldn't show this because it's kind of irrelevant. Yeah, I'm not going to show this because it's kind of irrelevant. But anyways, I don't think there's that many. Actually, yeah, okay, thoughts on the MLP, Mycelium, the GMX fork. Yeah, sure, let's find that one. Right, there's GMX forks in every chain. There's one on Polygon, right? There's one on Algorand, there's one on Aurora, there's one on fucking Arbitrum. To be honest, I think this is it's mostly like, it's this, right? Hold up. Let me make sure. Yeah, all these GMX forks, I think this is just like bullish overall for GMX itself. But everyone's like trying to copy this model of create GLP, earn trading fees, APR, whatever. But this is it's like the same company as TracerDAO, and there's going to be a one-to-one swap between the Tracer token and this token. And I think the market cap of this thing, what's the market cap of this thing? Does it say here? 82 million, like really? Like that is way too inflated in my opinion. It's unproven, it's a fork. I think TracerDAO is trying to pivot, trying to, I don't know, like actually gain market share. But I don't necessarily think that this thing has any legs. Let's see. Curve reassessment thesis. It's still August of 2022. Like I don't like. I think people have too short of a time horizon when it comes to just like crypto assets right now. And I know it's like easy to get caught up in like day-to-day price movements. Like, oh, FOMC coming out today. Oh, so like, ooh, FUD. But like at the end of the day, like it's gonna take months for these things to play out. But I guess if the curve thesis is invalidated if some other protocol flips them in like stablecoin volume. I'll talk about portfolio. Do I like Dopex? I like the community, but the project itself has a lot to prove. The TVL is like 30 million, right? And the market cap's like 100 million. It's more hyped than fundamentals right now, but I do think you can get there. How's my DFK bag doing? I don't know. I haven't checked in months. Have you ever bought an NFT? Yeah, I bought some NFTs yesterday actually. And maybe I can talk about that later. But like with NFTs, it's all speculative. So what I did was I borrowed AVAX on Aave converted it into ETH, bridged it on Ethereum, and then bought the NFT, right? So I'm not adding, I mean, I guess I'm adding risk to my portfolio, but I'm like short AVAX, long NFTs. So it's like, you know, that way I really recommend people like explore these pair trades. I know people love to just like buy a bunch of things with like their stable coins and whatnot, but if you really want to reduce volatility in your portfolio, you can like, if you're gonna, like, for example, if you're gonna buy like an L2 token, right? Like Dopex or something, if you want to mute volatility, you can borrow ETH and buy Dopex or something like that. Of course, you're gonna mute your upside, and you know you could potentially lose money. But if you're wrong, you know you're gonna lose less money, right? What are my thoughts on delta neutral farming? I mean, it's okay. I'm not a huge fan of delta neutral farming because no yield is actually delta neutral. I think there was someone shared that like delta neutral farming on like Alpha Homura is like actually losing money. I'm not a huge fan of synthetics either. I don't think their tokenomics are that great. And TVL is leaving the optimism ecosystem over time. So it's more hype. It's more hype. Yeah, that project is more hype. But anyways, let's just get to the presentation. And I think this will take like 10-15 minutes, and then I'll answer questions. I'll talk about why I think we bottomed, essentially. Or I'm not like 100% convinced, but I think more signs are pointing to a potential bottom. So I'll talk about that. I'll quickly touch on the portfolio, and then, you know, casual Q&A. Cool. So obviously in the past couple of weeks, I've been like buying things, and I have become more constructive in the markets. And one of the metrics I also look at is called market breadth. And you know, the reason I focus on stocks, even though this is a crypto channel, well, first of all, I think we're all like forced to like try like look at the stock market because the correlation is so, you know, it's nearly 1-to-1, right? But my bias, this is my bias. And unless there's like a black swan event, such as Vitalik getting hit by a car, merge not going well, right? Assuming that, you know, the markets are relatively static with no good news, no bad news, right? We just chug along. I do think crypto capitulation has already happened. And, you know, if we see the next leg of capitulation, like just something has to go terribly wrong in the crypto markets. We had Theranos blow up, Celsius blow up. That led to like a bunch of other, like dozens of other entities blowing up. And if that wasn't capitulation, then I don't know what is. So I think the only major bear case for crypto putting in new lows is equities putting in new lows. So if we can discount the probability of equities putting in new lows, I think the risk reward for buying crypto just becomes more attractive. And this is with a multi-month time horizon. I don't really care what happens tomorrow. I don't care what happens next week. I'm just trying to position myself for the next couple of months, 2023 and beyond, mostly, maybe Q4 and beyond, but I'm willing to look past the short-term volatility. Because in the short term, in the next 1 or 2 weeks, like price will go up and down. It's mostly noise. And hopefully, given the state of markets, hopefully the crypto markets can start trading on fundamentals, right? We've kind of seen that, right? With XMON outperforming, Lido outperforming. I think those two applications have good reasons to outperform. But generally, you know, I want to get to a phase where I can just like solely focus on the fundamentals and just try to be like a capital allocator in that way. Okay, and you don't even have to believe that there's a 100% chance that equities have put in new lows. Because think about it, like last month, maybe if you ask the general market, people would tell you that maybe there's like a 50% chance that the stock market has put in new lows, right? And then people will allocate that way because if there's a 50% chance, then you don't want to be all out, right? You want to have some risk in your portfolio and some risk out. But maybe, given the strength we've seen in the markets, maybe people assume that there's a 65% chance or a 75% chance that we put in the bottom. And then people are going to be forced to allocate accordingly. So I don't really have any like crazy strong views on whether we put in like a bottom or not. I mean, I guess I kind of do. I do think that the probability that we have put in a bottom has significantly increased than like a month ago. And I'll lay out my thesis for it. And one thing I like to look at is market breadth. Generally, you know, if you're on social media, if you like watch videos, like macro podcasts, individual analyses, and everyone has a different take on how they view the macro markets, right? And generally, anyone that focuses on macro just tends to lean more bearish, which is understandable. You know, inflation is still high, Fed is raising rates, and you know, even though the general stock market believes, and the bond market thinks that the Fed will pivot in early 2023. Right now, it's kind of hard to believe, right? I think generally there's a 60% chance that the Fed will raise 50 basis points in September, and then they'll probably raise 25 basis points in November and December. But I don't know what they're going to do in Q3, right? Q1 of next year. Everyone knows that they're going to keep raising rates to combat inflation. The question is how much of that is priced in, and what are the probabilities of a recession? I think, I guess where are earnings going? So going back to market breadth, it's defined as the percentage of stocks that are participating in a given market movement. So in this case, I want to focus on the amount of stocks that are actually participating in the rally since the June 16th or June 18th bottom for the stock market. And generally, if the stock market is going up and only a few stocks are going up with it, right? For example, if high growth tech stocks are going sideways and dumping, but the S&P is being carried by Apple, Google, Amazon, then that's generally not a great sign for the markets. But if the stock market is going up, right, the S&P is going up, and every stock, right, if the majority of stocks within the indices are participating in it, historically that's been a pretty good sign that it's a pretty good time to buy, even if the markets are up a lot from the lows. So this is a study done by Chilbaco Capital. They have a YouTube channel. I watch it every single week. I think they're a great channel. This is called a breadth thrust, and not really a breadth thrust, but it's like a breadth indicator. And he looked at the S&P 500, the percentage of stocks above the 50-day exponential moving average since 1999. And whenever, first of all, let's think about the sentiment that people feel when we're here, right? When we're at these lows. So in June we hit or May or June, we hit basically 0%, right? Every single stock was below its 50-day moving average. And obviously when we're down here, everyone's sad, right? Everyone's oh my God, it's all over. It's the end of the bull market, right? We're going to enter a Great Depression. The future is not great, right? And that's kind of how we all felt here. And obviously, just because we, hit these levels doesn't mean it's the bottom, right? Because as you can see in 2008, we hit these levels, but there was still one last flush in early 2009, the March of 2009. And also here too, right? But what this looks for is when this percentage goes from basically 0 to 85 or 90. I hope you can see this. Hopefully my video's not capturing it, or video's not blocking it. If you backtest this, it's generally a good time to buy, right? The last time we saw this was May of 2020, where everything essentially nuked 50%, and then we had this breadth thrust where 97% of stocks were above its 50-day moving average. And if you think about the sentiment back then, right, people were saying that this is the start of a Great Depression. We've never had unemployment gets almost 20% before. This is a once in a century event. We're not going to see all-time highs for the next decade. But we hit all-time highs in 2020, right? And to be honest, I didn't really expect all-time highs, in May of 2020. But this was one of the things I was looking at to really go risk assets in 2020. The markets. I guess what this proved was that the U.S. economy, the U.S. consumer is pretty resilient. It survived this once in a century pandemic, and we saw this in 2019, right? When the Fed pivoted with the trade war and whatnot. We also saw this here, right? So not just looking at this super depressed levels, but whenever we go from 0% to 85, 90%, if you backtest this, it's a pretty good signal that the forward-looking returns are pretty attractive, right? Looking there, and even the tech sector, and this was really interesting to me, right? So this is going back to 1996. So we hit roughly 5%, right? So 5% of the tech sector was bullish, right? However they define it. But even if even when the tech bubble burst in the 2000s, we didn't really get to these levels, right? We only got to these levels in 08, 09, and 2020. And of course, just going down here, right, doesn't mean it's a bottom. In 08 we hit here, but obviously we kept going down. But there wasn't this breadth signal, right? We went from 0 or 4% to 60%, and then we revisited those lows, and then once we got to this 85% level, it was a pretty good time to buy, right? This was roughly late 09. We're seeing the same signals there, and same exercise for the Nasdaq. Percentage of stocks above the 50-day moving average. backtest it. Pretty good, right? Pretty good. We run from roughly 6% to 70%-ish. And all these images are from August 11th, so the markets are a lot higher than or maybe not a lot higher, but a few percentage points higher. So like if you actually check this this week, I'm sure that it's like the metrics are a lot better. Of its 150-day moving average, pretty good confluence here, right? Backtesting this, and Mr. Chiobako Capital, right? Yeah, just subscribe to his channel; it's really good. So there were 61 instances where 61 signals, and when they say signal, they mention, they refer to like this blue line, right? So not from the bottom, but whenever the signal flashed, this was how generally the stock market performed moving on. So in 23% of instances, the drawdown from that date was less than 2%, 40% of the time less than 3%, 72% of the time less than 6%. The average drawdown in all cases, 61%, is 5%, medium drawdown, 3.5%, worst case 15%, and 93.4% of the time, the lows were in. Right? It's all about probabilities. And then forward looking, right, from the data to signal 1 year looking forward, the average return, 25%, medium 23%, in 98% of instances, the stock market was green. If you take a 24-month time horizon, 2 years, average gain 39%, 37% median return, and then 100% of instances, the stock market was green. So if you're like a stock market allocator, and of course, if you're in crypto, you don't really care about stocks, I guess, right? Because you're expecting higher returns in crypto. But given the correlation, this is like the stuff that macro allocators, I guess, like institutions look at, and it's part of the reasons why risk assets have rebounded so significantly, because people, like most institutions, like they're not like trying to trade like buy low sell high like every single week. They're just more trying to position themselves and their clients for the longer term. So at the end of the day, like I'm biased, right? Like you can look at any indicator or chart or whatever and have it fit your biases. On Twitter, right, I've seen people retweet the same charts, and one person was like, this is the reason why we're going to go lower, and then another person was like, this is the reason we're going to go higher, or whatever. But at the end of the day, I think it's all about probabilities, and I do think that the probability that the stock market has put in the bottom is pretty high. And I'm not saying all-time highs. I really don't expect all-time highs this year. I really don't. But I think there's a higher chance that we're just going to go sideways from here than us just going full doomer Wojak mode and going to like S&P 3200 is kind of my opinion. And this is from Jurian Timmer from Fidelity. And maybe if you outline this with past bear markets and stock market corrections, then maybe we're up here and we're gonna keep nuking. Maybe there's that, or maybe we just go sideways, right? And perform at par with whatever this chart is. But Jurian Timmer also says that if you put today's market in perspective and outline this chart or overlay this chart with past cyclical bull markets from the bottom, yes, it feels like we've V-shaped recovered and like we're going up in an unsustainable manner. But if we are entering the next bull market, which is kind of hard to believe, right? But people were also saying the same in 2020, then we're basically in the middle of the road. So nobody knows what's going to happen. And my advice, even though it is not financial advice, it's more psychological advice, is just to be prepared for all scenarios, whether we keep going up or we just keep going down. For me, I'm pretty comfortably allocated in crypto, where I don't really want to add on new risk right now, but I will be in this mentality of buying meaningful, in this mindset of buying meaningful dips until the facts change. I mean, this is my view as of August 17th, right? Maybe next week my views will change because there's some new data or news that comes out. You have to be flexible, but I think there are enough signals out there to say with some level of confidence that June was the bottom in stocks. And if June was the bottom in stocks, then I think crypto should outperform stocks from here on out, just because crypto nuked a lot harder. Even if the stocks just go sideways from here, I think given the level of capitulation we've had in crypto, I think if you have a 2023 and beyond, 2023 and beyond mindset, I just think there's so many bargains out here. And if you want to be conservative, maybe you buy GLP, try crypto, Bitcoin, Ether. And if you want to be more on the risk curve, maybe you can buy more altcoins. And I'm in this mindset of imagining, right? I'm just trying to think about the future, right? And ultimately, if you're not bullish crypto, then there's no reason to be watching these videos. My like obviously some people like treat crypto as like a way to trade, right? And they all think it's a scam. But for me, I really do think that DeFi has product market fit. I also think NFTs have product market fit. So I'm trying to think about, okay, 2023 and beyond, like what does the crypto landscape look like, right? Like what projects are big, what projects have a competitive moat, and what kind of, world will we exist, or what kind of world will we live in, assuming that more capital flows back into this ecosystem. And I'm trying to imagine that and then allocating accordingly. So I think NFTs will be big. So, I bought some XMON. I think Arbitrum is going to do well 2023 and beyond. So I have some Arbitrum tokens. I think stablecoins is the only up-only market in crypto. So I always want to have exposure in the stablecoin sector. And I'll talk about my portfolio later, but that's kind of how I think about it. And when I say meaningful dips, right? Like I'm not like, I think Bitcoin is like down 7% in the past couple of days. Ether is like down 10%. Like that's not a meaningful dip, right? In crypto land. Because if you think about it, like in 72% of the time, or just imagine, right? The average drawdown is 5%. So like what if we see a 5% drawdown in the S&P, right? I'm sure that Bitcoin would be like at 20K or something. Ether would be like at 1,600 or 1,500, and everyone would be shitting their pants, right? It's like, oh my God, the bulls are going to be like scared. The bears are going to be like, retweeting macro podcasts, and, we're going to be, but I think the more likely outcome is that we're just going to go like sideways. And then once we go up, then bulls are going to be like yelling at the bears. And then once we go down, the bears are going to be celebrating. And I think people are just going to get tired over time with like the lack of a trending market. But that's kind of how I view it. So, criteria for me to buy the dip is if the S&P, for like, I guess for me, like I'm already meaningfully allocated. So I'm only going to buy crypto assets if we see like a 15, 20, 30% correction. If we don't see it, then that's fine, right? I'll just like hold my cash and like, just farm or something. Just being prepared for all scenarios, up or down. And ultimately, I do think people are better off just finding high conviction plays, right? And, if you're scared about risk, then maybe you focus at buying Bitcoin, Ether, try crypto, GOP, whatever. Or, if you spend as many hours as I do, doing research on these like magic internet coins, then maybe, you can go at the risk curve. I don't want to overtrade right now, right? Because in any particular week, it's really, really easy to get shaken out of whatever you hold. And, chances are some things I do own just go to zero, right? But that's totally fine. That's the risk I accept. If you think about people that performed really well coming out of 2018, 2019, that bear market, it's people that just built giga high conviction on some plays and just held it, right? Sure, some coins just went to zero, and there's like a level of survivorship bias because if you only hear about successful people that like, made like 200x or something. But to be honest, like I don't think my edge is trading. I think my edge is like doing research on fundamentals, and I'm just like betting on myself that I think I know where the crypto markets are going. And my portfolio kind of reflects that. I think it's better to focus on long-termism over short-termism, and trading, right, has hidden costs to it. I operate mostly on-chain. I don't like to use centralized exchanges because I think there's like better opportunities on-chain. But if you trade on-chain, there's gas, right? You have to pay gas. There's always bridging fees. There's 0.3% DEX fees, right? I mean, that's really high, right? Like Uniswap takes a bunch, and like Uniswap Forks takes a bunch. There's slippage. There's always slippage because all these liquidity pools are so illiquid. And sure, you might like capture 10, 20% moves, but if you think about it, like the level of tax that you pay to make these trades, it's going to cut into your P&L. So I think generally it's just like better to just build conviction. And if you don't have conviction, I think it's fine just like stay in cash or just like the majority majors. Just trying to find where your edge is. Just try to be positioned where you're just prepared up or down. Yeah, and I live in this utopian scenario where we've had this like macro correlation like 1-to-1, but I think that if the markets can just go sideways, I think the crypto markets can actually trade on fundamentals. And I mean, it's probably not going to happen, but that's the kind of world I want to live in. So before I answer some questions, I'm sure people are screaming at me in the chat. I can't see the chat right now, but I'll just briefly touch on the portfolio, and then maybe you can ask me some questions. And this kind of reflects my views, right? So this kind of reflects my views. But this is not what it looks like. So green means I long, right? Or I'm holding it, and then red means I'm short or hedged. So, just majority majors, right? Bitcoin, Ether, bullish long-term. No, just long-term mindset there. 25% stables, right? Comfy, right? Comfy. If we get a dip, I can buy stuff. If we keep going, then I have 75% into risk assets. That's fine. Lots of NFT infra, XMON, 8% in stablecoin / Curve ecosystem. I mean, CVX is trading like a shitcoin, right? But it's okay, right? I'm just gonna, just 2023 and beyond mindset, and then some in the Arbitrum ecosystem. But Arbitrum, I don't think that ecosystem is gonna do that great until there's a token. But I'm okay just sitting there and farming various things. And then I talked about the short, but last week I mentioned that I borrowed AVAX on Aave and I bought GLP with it, right? So I'm technically short Avalanche. I don't have anything against AVAX, right? I'm just shorting AVAX out of necessity, right? Because GMX is on Arbitrum and also Avalanche. If GMX was on some other worse obscure L1, I would short that L1 coin. But I just think that if the markets go down, Avalanche will underperform. So I'm just hedging that way. Okay, and if I want to buy dips, my shopping list is GLP, Try Crypto. Those two assets I think is still significantly underrated, and Arbitrum ecosystem. I don't want to mention coins because right now it's so speculative and the fundamentals are kind of meh, right? The fundamentals are questionable aside from GMX. I think GMX is the only fundamentally strong coin in the Arbitrum ecosystem. But I do expect when they release a token in Q4 or Q1, there's going to be a bunch of capital flowing, and then it's going to be a top 5 chain, in my opinion. It's going to flip Polygon, Solana, maybe even Avalanche, right? Time horizon, longer term. And I really recommend people to consider doing this concept of pair trades where, for example, I mentioned earlier that if you're buying this altcoin, right, maybe you can short Avalanche or Ether with it, right? You can borrow Ether, buy an altcoin, borrow Avalanche, buy an altcoin, because if you're buying something, then you should be buying that expecting it to outperform to the upside. Of course, you'll lose money on the downside, but if your altcoin is going down, then chances are whatever you borrow is also going down. So you kind of mute your volatility in your portfolio. And I really recommend this hedging strategy of borrowing Ether, borrowing Bitcoin, borrowing Avalanche, and just buying GLP with it. Because with GMX, I'm not really buying things just because I already have some GMX, and if I'm going to be farming on GLP for the next 6-12 months, then there's no reason for me to buy GMX. Okay, so there's that. That's a quick slideshow. Let's see if people are angry, and let's go from there. Let's see. Okay. Thoughts on Alchemix loan? People still use that? No, I don't think Alchemix is product market fit. Self-repaying loans is kind of dumb, in my opinion. What is your dip buying strategy? Comparing DCA according to risk levels with Ben Cohen. Yeah, I mean, Ben is more risk averse than I am, right? And he's just focused on the majors and Cardano and stuff. For me, I think I'm more into I do a lot more research when it comes to DeFi and NFTs than Ben, right? Nothing against Ben. I love Ben. But I'm trying to I'm not gonna how can I say this? You have to understand where your edge is, right? What is your edge? I think my edge is research and trying to predict where the space is going. You can't really buy things based off of current metrics. You have to buy based off of future adoption, right? Because everything is down a lot because no one's using it. But you can't not buy something because no one's using it, right? If you expect more capital flow in later down the line, into DeFi or NFTs, you have to think about, which applications, which protocols are going to capture that volume. And that's kind of how I'm thinking about it. Because like I mentioned before, in a bear market, the fundamentals for everything is pure garbage, pure trash, right? People leave, people unsubscribe, people think everything's a scam, and no one uses these applications. But at some point, people are going to come back, right? We've already seen people come back. Prices are going up, right? So if NFT volume comes back, which applications benefit from that? Obviously OpenSea. I think XMON will benefit from that. And maybe if you don't want to make a bet on XMON, maybe you can buy individual NFTs that you think will do well, right? Whether it be Pudgy Penguins, Punks, whatever. That's kind of how I'm viewing it. And I could be wrong because I have no idea. I'm just trying to apply my knowledge of the markets and making what I perceive to be, risk managed bets, even though you might disagree with me. And that's kind of how I'm thinking about things. How much is GLP Try Crypto paying? Pretty good. I mean, Try Crypto, you have to check different chains, but let's see GMX. Right, not bad, not bad. You buy GLP on Arbitrum and you get 25% paid in Ether, right? Organic volume, that's pretty sick. On Avalanche, you get some AVAX, some escrow GMX. And the cool thing about this is that like I don't really want to, I don't think Avalanche will do that well. So I have debt denominated in AVAX. So I'm just like using the yield to pay off my loans. And, if markets just go sideways, I'll profit. If markets go down, I'll profit from the hedge. Yeah. Let's see. Midterm elections will affect the crypto markets. I mean, you shouldn't be asking me that question, but generally, I think there's a pretty good chance that there's going to be a gridlock. And generally, the stock market tends to outperform when there's gridlock. Just because when governments get nothing done, then the market tends to like that because there's less uncertainty. Once inflation goes up 5%, the Fed always has to go beyond inflation and rates to bring it down. Yeah, that's true. But, you have to think about this, right? Like, what is your edge analyzing macro, right? Especially what is a crypto bro's edge in analyzing macro? I don't think there's that much edge, right? You go on Twitter, you see people doom posting because of macro, but what the hell? I'd like to keep it simple. I look at a very few things, and market breadth is one of them. It's really worked out well for me in the past, and even though it's scary, right? But everyone's scared, right? I mean, you can't have these types of, what is this? You can't have these levels of stock market performance, right? These levels of stock market stocks below its a particular moving average without people being scared, right? Because if you think about the sentiment back here, right? People were scared equally, obviously for different reasons, but in terms of sentiment, people, were equally scared essentially. And what you experience now, right, where we went from 0 to 85, you're experiencing the same emotions as people did in 2020, right? Maybe you're familiar with how you felt back then. Maybe you're familiar with how you felt back here, and with the 09 and whatnot. And that's kind of more of what I'm relying on. Okay. Layer 0. Am I still holding near? No. I mentioned this a lot, but if you think about alt L1s only do well when Ethereum gas fees are high, right? People get priced out, and there's a lot of demand for block space. And when there's a lot of demand for block space, people go on alternate chains, to satisfy that block space, right? If Avalanche has a lot of block space, then people will naturally flow there, right? Just natural capital flows. And gas right now is what is this right now? Gas is 23. Okay, I mean, but I feel like alt L1s won't come back until Ethereum gas fees are sustainably above 50, and not just for a day, but over a 1 or 2 week time horizon, right? Until ETH gas fees are sustainably above 50, and 50 is a random number, right? Maybe it's 40 or 69, whatever. I don't think alt L1's volume will come back. I like Avalanche. I mean, I farm on Avalanche, right? But I just think Avalanche underperforms. And same can be said for all alt L1s. Doge Chain is the future dog money. Yep, you're definitely not biased there. What narratives do you think will be the most significant in the future? I think that merge is obviously super strong, right? I mean, the merge is giga bullish, right? Obviously, as long as it actually works, which I think it will, right? I mean, they've been doing testnet merges for the past many months, so I don't think it's going to be. I think it's going to work, and there's going to be, people call it the triple halving event. I think it's like the Bitcoin halving where, people get super hyped into it. We go sideways after the merge, slash Bitcoin halving. And then at some point over time, the supply shock really hits the market. And then we're going to just hit all-time highs again. I also think NFTs, because NFTs had their first cycle, right, this year or last year. I think they will come back. I don't really have an edge with NFTs, so I just like bet on the infrastructure, hopefully. But I do think NFTs will come back. A bunch of these Web2, like legacy companies are trying to get in on that game. I do think NFTs are going to come back. And I do think that NFTs have a reasonable chance to lead us out of the bear market in whatever shape or form. I have no idea. Okay, Ambraham, what are your thoughts on Abacus? Okay, so let's talk about, I have no idea. Okay, so let's talk about Abacus. I follow Degen Spartan on Twitter, so I have to pull this up on a different tab because I don't want some random things to pop up. Hold up. Is this one? All right, there's this one. Okay, so. Does anyone understand Abacus? DM me if you do. But this concept of like appraisals, right? Appraisals are when people value art, or like the free market, or like someone values the art, and if you want to sell your art, like some expert comes in and they're like, oh yeah, like according to this data, this artwork is worth $80,000, right? And then the person lists it for $80,000. And there's like this free market of, let's create a basket of these NFTs. And let's have the market decide like how much of this basket is worth. And then like, what is this? Okay, I'm not gonna talk about this because I don't understand it, but I don't know. I feel like there's just so much innovation that could be built on top of NFTs. But like, how do you value, I don't know, right? Like, yeah, sorry, this is kind of a waste of time, huh? Because I don't fully understand it. Yeah, I don't know. But the thing is, I have no idea, right? And this is like the beauty of XMON or sudoswap, is that I have no idea if this will work. But if it does work, it's going to utilize sudo. So I'm like, okay, like I have no idea if it'll work, but it'll probably use sudo, right? And then there's this other thing called Protect. This is like NFT market making, I think. Yeah, bolstering NFT liquidity. And I think, the Saudi, okay, I'm not gonna talk about the Saudi NFT, but there's like NFT projects that are utilizing Protect to manage their own liquidity on sudoswap and like stuff like that. Like I have no idea what the hell is going on there. But that's why you kind of bet on NFT infrastructure, right? Like, I don't know if these use cases will come there into fruition, but if it does, then some certain projects will benefit. Sudo UI is horrible. Yeah, it's awful. I bought an NFT on Sudo yesterday, and then I had like 10 failed transactions. I was like, oh my god, like, and then there's like the anime girl that says like sudo swap, and I'm like, yes, my transaction went through, and then it gives me the error like swap unsuccessful. It was awful. Oh god, this chat is. I mean, the questions about like these alt L1s, like I'll get back into alt L1s once Ethereum gas fees come back, right? Like that's literally my only criteria. So just assume that if Ethereum gas fees are below 50, alt L1s shouldn't do that well. Of course, it can go up because people will like buy things, but I don't think alt L1s can meaningfully outperform Ether on a risk-adjusted return basis until the bull is back. Yeah. Why aren't you a fan of JPEG? I think JPEG, borrowing against your NFTs, if you think about the actual demand for people to borrow those NFTs or borrow against their NFTs, it's not that much. Like not that many people want to borrow against their NFTs. So like these multiple NFT projects are just trying to compete on this tiny ass market. So like, why would I want to speculate on that? I think Kujira is really interesting. So Kujira, let's pull that up. Oh God. Kujira. Oh God. Kujira, so they used to do those liquidations on Anchor, on Terra, then Terra blew up, but they continue to innovate. They have this USK thing, which is like DAI. It's over collateralized stablecoin on Atom. And they also have this project called Fin, which is like this centralized limit order book. I don't think there's that much volume, but generally with the Cosmos ecosystem, I don't really think that, like I don't want to buy Atom. That coin is cursed. If I do want to bet on the Cosmos hub, I think you're just like better off buying individual L1s on like built on top of the Cosmos hub. And Kujira could be good, right? Right. I like to see projects that are continuing to ship because you don't see many of those these days. Have you put... Is DFK dead? Probably. Have you put any money into the Polkadot ecosystem? I mean, Polkadot and the Cosmos ecosystem keeps getting wrecked, right? With the Nomad bridge hack, Akala USD got nuked super hard. I mean, let's pull that up actually. Oh yeah, like this one. Right, this thing got nuked. I feel like I don't really understand. I feel like Polkadot, like, I don't really get people that are allocating to Polkadot right now. Maybe I'm missing something, but I don't really see anything that's that impressive. I know some VC friends and like, they're like super bullish Polkadot. I'm like, okay, bro, like they have no users. And this thing happened. I do own, what is it called? So like in 2020, like I didn't know anything, and like my friend convinced me to get into like this public bootstrapping pool for like Basilisk, I think, or Hydra DX, right? Hydra DX. So I have some Hydra DX tokens, but I mentioned this on Twitter before, but like the Polkadot wallet is like so trash. It's so trash. It's like I feel like I'm in the 1950s when I used the Polkadot wallet. So I mean, I have some capital, but I kind of count that as a zero. Like I don't really care like what that does because I had no idea what I was doing. Yeah, a lot of people don't think the bottom's in, but that's fine. We'll see how the market does. I do think it's reasonable to get a pullback, right? I mean, because it has been pretty up only, right? I mean, what is it? What the hell is this? Right? I mean, look at that. So can we do something like this, right? So if you do something like this, or that's unlikely. I think what's more likely is just like something like this, just sideways. And if we do get a 5% correction, or this is even a deeper correction, but if we get something like this, then I'll be buying this dip. I'm not buying anything right now because like this is what is this? The dip for ants. If the S&P goes down like 6%, then crypto is going to be nuking, right? It's going to be nuking for sure. So I'll just like buy that. How am I positioned for the merge? Well, you saw my portfolio, right? I already. Yeah, it's just Ethereum-based projects essentially. ETH-L1, ETH-L2 projects, NFTs, and Ether, holding Ether. People like Aura. I'm not a huge fan of Aura. I think Balancer vaults, that technology is interesting. Let me pull that up actually. I guess what I'm doing right now is I'm just like I'm just pulling up random resources. The thing is like, I feel like I know a lot about all these things going on. So hopefully I can make money. Hopefully I don't get wrecked. Right? I can't find it, but Balancer vaults, it's kind of cool where if you think about LP pools, so I'm just going to explain it vocally because I can't find the resource. But Balancer vaults, if you think about Uniswap V3, right, or this Uniswap, each pool has like their own individual LP pools, right? So ETH-USDC is separate from Bitcoin USDC. But with Balancer vaults, all the LPs it goes inside one vault, one big vault, and then trades can happen within it, which should increase the capital efficiency. But I don't really see what the bull case for Balancer is. So if Balancer doesn't do well, then I don't think Aura will do well. But in the short term, right? I mean, things can pump, right? Things can pump, right? So you do you. I can't find it. Let's see. Not music NFTs, no. I see. Yeah, the thing is, like, I don't really have an edge in NFTs. The thing is, I'm pretty confident that the NFT market in the next cycle is gonna like be crazy, right? I know that for a fact. I don't know when, but I know that for a fact. But like, how do you want to allocate, right? Because betting on NFTs coming back and like buying NFTs, like, I don't know, I don't have an edge in that. So I think it's more diverse. Maybe it's kind of like diversification when you buy like NFT infra, because you're just like betting on NFT volume coming back, right? And maybe it's LooksRare, even though I don't like LooksRare. Maybe it's Xmon. Maybe OpenSea just gobbles up all the volume and like everything else goes to zero, and I get wrecked. But that's kind of how I view these things. Let's go back to this. I already answered questions on Mycelium. I think it's overvalued. Arthur Hayes backing it does not mean anything. Arthur Hayes was shilling Sushi and LooksRare. His macro reviews are great though. I mean, I even have it pulled up here, I think. Yeah, eat Flexive, right? Very, very smart guy. But I disagree with some of his takes on DeFi. Umami and FXS. I like FXS, obviously. I made an hour-long video on it, so I'm not going to regurgitate it. Umami, I'm not a huge fan. I mean, the product kind of makes sense, but I don't know, like, it's not real yield. I mean, there's like this real yield meme, right, in crypto and like Twitter and whatnot. But like, I don't know, like, what does real yield need a narrative? Like, shouldn't we only be focused on projects that generate cash flow or whatever, right? You know, it's kind of like saying, you know, ooh, like stock market, the narrative is profitable companies. In Dopex, like, I think it has a potential, bunch of potential. I guess the one thing that separates Dopex from like things like Ribbon is that Ribbon, Data Nuts, things like that, they create structured products where they, you know, they do things off chain, and then, you know, they allow people to get on covered call strategies, you know, put selling strategies. But Dopex is actually trying to, you know, create an options protocol, like a decentralized options protocol on chain. So if it succeeds, I think the total addressable market for Dopex is much larger than things like Ribbon. But the tech right now is not there yet, so very speculative. If a bridge got hacked, then you're probably not going to get your money back. Opportunity overload. Yep, it's crazy. Just focus on what you think of it. You have an edge in, right? Like, if the NFT markets start pumping, like, I'm not gonna, like, you know, buy NFTs because I know that I'm a pleb. You know, just pick your battles. What are your thoughts on Solana? I like Solana. I think one concerning thing is that I think SBF is slowly trying to distance himself away from Solana. Of course, SBF is value accretive to Solana because, you know, if SBF is like doing these partnerships, then, you know, he's obviously gonna think about incorporating Solana more. But I think he also invested in like Aptos. I think Alameda is also on like Near and stuff. So I think in 2020, SBF and Solana, they were like, you know, tied to each other. But I think Sam is just trying to distance himself away from individual projects, which I think is reasonable if you think about, you know, what he's trying to do. I think Solana will come back though, but I don't own any because it's an alt L1. So when alt L1 own fork season, so the thing is, I think people kind of get this wrong, where if you think about the crypto markets, like looking back, like everything is so dumb, right? Like things that pumped, it's like how did these things pump, right? And then people assume that, oh, next time I'm gonna buy the same thing because it's gonna pump a lot harder, right? But I feel like people are just better off assuming that people get smarter over time, right? Because if a new own fork launches, it's not gonna pump, right? It might pump for like 2 days, but everyone knows how it's gonna end. So, you know, every new narrative is something new, something novel. And maybe you can argue that some of these things aren't really novel. But I do really advise people to not assume that, you know, crypto markets are like, people trading these things are like super dumb. Because people do get smarter over time, right? Like people learn from their mistakes, from past mistakes. Let's see. Arbitrum airdrop, just use a chain. When Odyssey comes back, just farm those NFTs. Oh, Akala USD is back? Okay, I don't know. I mean, merge plays, like, the only thing I can think of is like, I don't know, maybe USDC on an L1 chain, borrow Ether and bridge that back so you can potentially get more ETH proof of work coins. But I don't know. I think the day of the merge, I'm gonna like de-risk my money market positions because there could be some volatility with Chainlink Oracle. I mean, I don't necessarily think so, but even if there's like a 3% chance that something bad could happen on money markets, like I don't want to get liquidated for like a bunch of my collateral. So I'll just probably like risk off of like LPs, money markets, just for like that day and just enter back in, just so, like, you know, obviously it's very unlikely to happen. It's probably not going to happen, something whack, but you know, there's a non-zero chance. So I'm just going to de-risk. Nothing you can do with XMON. Let's see. OB is crashing. Yep. Yeah, I mean, I'm not a huge fan of optimism. I don't farm Uni V3. I'm very aware of how to do it, but I don't really do it. What projects are you looking on Arbitrum? I mean, I mentioned this last week, but I think Dopex is interesting. I think Plutus is interesting. Spirax, I think, is interesting. GMX, obviously. Not a huge fan of Magic. No product market fit. It'll probably pump though. But you know, I'm not gonna like buy some things to like dump on people. Just, you know, for pumpamentals. I'm a little more looking for fundamentally driven plays potentially. Yeah, borrowing against spot ETH to farm GLP is really good, right? I mean, GLP, best farm in crypto, severely underrated. Yeah, I know a lot of people that like have like Bitcoin or Ether stablecoins as collateral. They borrow like 12.5% AVAX, 12.5% Ether, 25% Bitcoin, some stablecoins, and like they just like dump that into GLP, and then they use the yield to pay off their loans. I think that's really cool. Where's the best place to learn DeFi for a beginner? Maybe my older videos. To be honest, like I'm kind of pivoting this channel more towards like more sophisticated plays. I want to focus more on. I'm focusing less on top of funnel now. I'm more focusing on bottom of funnel, where because I don't think there's any value in like making a video every single week on like how to farm. Like you know, like what the hell? Like there's no retail entering this space, right? Like there people are leaving, so. I think there's more value in doing deep dives on, you know, the future of DeFi or whatever. Let's see. Only critique I have is that by ignoring the Alta ones, you're kind of ignoring the NFT infrastructure innovation happening there. Can't assume ETH will lead NFT infrastructure going forward. That's true. That's definitely true. But this is going back to like the order of operations, right? Like if you think about Solana NFTs, because the number 2 ecosystem, NFT ecosystem is Solana, right? Followed by, it's Ether then Solana. And you have to think about, okay, what's going to cause Solana NFTs to start popping off again? It's going to have to be Ethereum NFT speculation coming back. So my bias is that for anything to happen on Alto 1s, NFT, DeFi, whatever, there has to be activity on ETH mainnet first. And I think that's probably the right way to think about it, at least in my opinion. Not sure. So, I think it's just better to allocate towards Ethereum-based projects. And then once activity comes back, then you can, expect more block space demand to flow into Alt L1s. And then you can kind of speculate there, right? Because, you can buy Alt L1 projects, coin like L1 tokens, DeFi tokens that you think will appreciate, and maybe 12 months from now you'll be happy. But it's not gonna, these tokens are just gonna underperform either in the short term. So I don't necessarily think that it's that great. Why is that, I'm Chris? Because tokenomics are poo-poo. Very, very poo-poo. Which NFT did you buy? Do I want to say it? Hold up. Let's pull this up. Let's see. Let me pull this up. Where is it? Okay, so I saw like 6 questions, so I'm gonna talk about this. NFT. Okay, I'm just gonna talk about it. Like maybe I'll regret this, but I'll talk about it. And if reception, if people get angry at me for talking about an NFT project, I won't talk about it in the future. But there's like not that many people in the markets anymore, so like who's even watching this, right? But obviously I'm bullish sudoswap, and Brent is one of the community members for Sudo. He's anonymous, I don't really know who he is, but this project launched, and I do think that in the future, right? I mentioned earlier, like where's the space going, right? And I do think that right now NFTs are traded on central limit order books, such as OpenSea, right? And it's so new, right? The space is so early that people are okay paying like 8% fees, but I don't think that's the future. I do think that majority of people treat NFTs as short to medium term trades, and people like sweep floors, right? And people don't care what these JPEGs look like. They're like just buying these things and treating them as altcoins with pictures. So I do think there's a future where in the future there are going to be more and more projects that's going to prioritize creating liquid NFT projects on sudoswap with really deep liquidity. So people won't have to undercut floors, which might cause a reflexive loop on the downside. And if you have deep liquidity on sudoswap for an NFT in the Ether, I really do think that creators and artists and projects can actually make more being an LP for sudoswap than just charging like a flat 5% royalty, right? I think it's complacent if artists believe that they can charge 5% royalty fees in perpetuity. I do think in the future there has to be more creative ways that artists have to utilize in order to generate buzz for their protocol and make money for themselves. And I talked about this in the sudoswap video, but Brent super bullish on sudoswap, but basically he did this NFT mint on a curve where it starts out as a one-sided deposit, right? So he deposits a bunch of NFTs on sudoswap, and then people can buy those NFTs with Ether, and all the proceeds, right, minus fees, are going to go towards artist-owned liquidity. So he isn't really making money from these NFT sales. I mean, he makes a fee, obviously, but all the liquidity is going back to this artist-owned liquidity. And over time, as more people swap in and out of these pseudonauts, these NFTs, the pool is going to become more liquid, and it's going to allow for this like stronger floor support, I guess. Because if an NFT project is super liquid, right, and there's a bunch of liquidity, then I mean, I guess it's like a good and a bad thing. But if something is super liquid, right, think about like tokens in general, it's really hard to nuke price, and it's really hard to make price go up, right? You can see this on just any altcoin charts. If something has like $1 million in liquidity, like all it takes is like one like medium-sized sell to nuke the price 10%. But if the liquidity is super thick, right, then even a big sell isn't going to move the price. So because the liquidity is so thick, you know, this NFT is not going to go up or it's not going to go down, right? It's just like flat. The concept is, you know, they're going to do this mint, starting price 0.1 ether. They're going to reserve, 2,000 units, 200 is reserved for themselves. Exponential curve 0.22%. So every time someone buys an NFT from the curve, the price of each subsequent NFT is going to go up by 0.22%, right? And you can kind of verify the curve here. And yeah, there was a reveal. And the goal is to increase pseudo volume in the user base, try to become the highest TVL NFT project on pseudo, showcase potential of cool launches, right? So maybe people will study this and do new NFT launches in this way because it benefits both creators and the community by creating a liquid NFT platform. Test OpenSea daily volume, and I guess like a use case of how highly liquid NFTs will perform. And, you know, I mean, yeah, like no one's going to buy this above like a certain price. But, you know, the concept is that it's an exponential curve and all the proceeds go towards liquidity. And it's actually caused pretty good metrics, actually. Let's pull this up. Obviously, there's this. What the heck? Obviously, there's this and this. Where, yeah, I mean, NFT volume is abysmal right now, but on sudoswap, it's just up and to the right. There's constant daily, new users, total users up and to the right. And in terms of, I don't know if you can see this, but daily volume dominance, sudoswap versus OpenSea. I mean, this is all unincentivized, right? I do think that potentially sudoswap can get to like over 50% of OpenSea's volume. It's not going to be sustained, right? I don't think anything will flip OpenSea sustainably anytime soon, but the trend is there, right? The trend is there. And as long as the metrics keep improving, then, you know, I'm happy to hold this, to be honest. Hopefully I didn't anger people. If it angers people, then I'll never talk about NFTs again. That's fine. OP multisig hacked, is that real? I wouldn't be surprised. Is it on Twitter? Oh, it did. What? Wait. Is this real? Hold up. Is price nuking? I mean, it was already nuking to begin with, so I guess that's not that surprising, but I don't know if this is real, but I saw this on Twitter. This one. What is this? Oh, okay, yeah, it's just FUD, right? I mean, he's just engagement baiting. Okay, yeah. Engagement bait. We all fell for it. We all fell for it. Hold up. I have to head out soon, but I'll answer a few more questions. Sorry. Shoot. Can you take a break for 5 minutes? I need to go to the bathroom. Okay. Oh my god. The heck's okay. Okay, so this will be one of the last questions, but like I was talking to an accountant and like this guy was shilling me hex like to the max. I was like, are you serious? Like you're an accountant and you're like shilling me hex and pulse chain? And he was like shilling it to me for like 20 minutes. And he was like, yeah, like, you know, Richard Hart saved my portfolio because he told me to not put my money on Celsius. But like, I don't know if that would, I don't know, man. But I mean, maybe he's right. Maybe Richard Hart's a genius. I mean, he's a marketing genius, right? So. Yeah, I mean, Evmos, like, they lost a bunch of TVL, so yeah, I don't really care about Cosmos. Are you bullish privacy coins? No. In terms of portfolio allocation, just like do what you're comfortable with, right? Like you just want to be prepared for upside and downside. That's all that matters at the end of the day. I think it's foolish to just assume that like something is going to happen 100%, like with 100% certainty, right? Like being 100% in cash just because you're so certain that we're going to put in new lows, I think is a little foolish. I do think it makes sense to just hold some, right? And even if you're super risk averse, like holding GLP, try crypto, or just like, just holding Bitcoin, right? And holding your keys. Like, I don't know. I just like don't understand the mindset of like, this has to happen 100% of the time. Let's see. But okay, maybe that's enough. Okay, so you know my views. You know my views on the markets. We'll see if I'm correct. Got this guy. Okay. Why won't someone fork sudoswap? I mean, they could, right? But they also said, like, what if someone forks Uniswap? I mean, everyone forks Uniswap, but Uniswap is still the number one DEX, right? Like, there's always premium assigned to the early mover. And I mean, sudoswap took like over 12 months to like make, right? So yeah, sorry, I have to head out soon. Oh, okay, yeah, sorry, I have to go now. But thanks for watching. I have to go. Bye bye.